Good morning to the lovely audience here. I'm Mili Verma, part of the shipbroking arm at M3 Marine. To set the scene a bit about new building and offshore, just a small, so the offshore new build space has changed rather significantly in the past 1 year. Several orders have been placed across different asset types, whilst a portion of these are against awarded contracts and part of fleet renewal exercise. A significant portion, especially the AHTS and PSVs, are being built on speculation. And the interesting thing is capital remains limited and expensive. So in this panel, we'll request the industry experts to share their view on offshore new builds. Would like the opportunity to introduce our guest today. Florent is the CEO of Britoil Offshore Services. Thibault, the Regional Commercial Manager for Tidewater. He oversees the operations across Asia Pacific, Middle East, and Africa. Captain Alok, founder and chairman of Alphard Maritime. So Mr. Solomon Tan, the executive director for Energos LNG, Singapore. So to kickstart the panel, my first question would be to Florent. In May of this year, Britoil announced a new build program for 6+2 units of AHT, the anchor handling tugs. Could you please share your experience here, be it the finalization or specification, any future fuels in the specs, yard selection, maker's list, yard finalization and slot availability, refund guarantees, and the most important, construction financing?
Yeah, good morning, everyone. There's a lot in this question, so I'll try to address it step by step. So we have a new building order for 6+2 units. It's 80 to 85 tons boil output AHTs in China. And the first rationale for us was to renew our fleet. So we have vessels that are 60-ton boil output in the water now that we want to renew. And our guiding principle has been to have vessels that are fit for purpose. It's very important, so that means meeting the construction EPC client demands. What does it mean? It's vessels that are fit for purpose in terms of anchor handling and towing. So we have a lot of state-of-the-art equipment, and we also have decades of anchor handling experience built in the design. Then the guiding principle also has been on the fuel oil consumption. So if you look at what we're building compared to what is in the water, we have a 30% increase in engine size for a 12% reduction in fuel oil when it comes to operations on the plain and simple barge storage operations, which is the scope that those vessels in the water now are doing most. So that's been our kind of guiding principle, to really have fit-for-purpose vessels. And then on the other questions, in terms of contracting, we have really mandated which equipment we wanted to the shipyard, but they are contracting direct to the equipment makers. The loan-to-value is about 70%, and we have secured financing for this program.
Interesting. So you mentioned even with higher BHP, we are getting lower fuel consumption. So if you could, and since this, with the whole decarbonization and everything, this being a very important topic, how is this achieved? Are we going for diesel electric? Are we going for hybrid? Or is it just selecting the right hull and the right engines?
Yeah, a lot is on the hull shape, the engine selection, the propeller size as well. So it's direct drive, because that's what's most suitable for anchor handling operations, but with a lot of thoughts on the design and the reduced fuel oil consumption.
Okay. Sticking with you, Florent, as you know, a lot of the new builds that are being built in China today are speculative, especially on the 4,000 deadweight and higher, and the AHTS. Most of them are 90-ton diesel electric, and we're talking about few dozens of these being built. What are your thoughts on these? Like when it comes to the makers list, would Britoil potentially be the buyer for these kind of vessels? And a bit on the supply as well, like seeing around 20, it's like what I see, like 15 AHTS coming in the market, all of a sudden in the next 2 years. Is there room to absorb these vessels?
I guess there is. We'll see what the market says. For us, we're not actively pursuing anything right now in terms of resale. We keep our eyes open, but the valuation needs to make sense.
Staying on the topic of speculative builds, Thibault, the general view of the market is that most of these 5,000 deadweight plus units being built, especially by the Greek owners, they have Tidewater as the potential buyer. So what are your thoughts on this? Do you see value there?
Hi, hi everyone. I think just to share a bit what Florent just talked about, I think the value of those assets right now don't really make sense for us, especially in a market which is a bit like softening in 2025. I think Tidewater is a bit more focused on still trying to do a bit more consolidation. We've been acquiring Soirée Pacific Offshore in 2022, and then the Solstad fleet in 2023. I think we're a bit more focused on trying to finalize some of those deals moving forward with a kind of consistencies about area we're operating already, and then the fleet that we currently have floating. We have more than 200 ships. Some of the design that we're seeing being built are also not exactly what we would have been looking at, and also from an age point of view as well. I think Florent touched base on the fact that their approach was more into a fleet renewable program, when we're seeing the average fleet of those 800 and above square meter PSVs to be 13.5 years, which is still quite a young fleet. I think the market right now is quite balanced with regards to demand for those kind of assets, and it would be a bit difficult to see exactly where those vessels are going to be fitting into the market. The only traditional OSV players that have been passing orders for PSVs is actually Seacorp, but I think that was kind of part of a refinancing from their part as well. And we also seeing the push from our clients right now to kind of, they're very cost focused right now, the clients, and then I don't think they're yet to be ready to pay any premium for new assets, but that's basically our point of view. Yeah.
Thank you. And staying on the topic of PSVs, more for the benefit of the audience, the way I see it as the PSV market this year has been rather soft across the various regions. Now, Tidewater is one of the main, truly global owner-operators. So what's the bird-eye view that you see this with PSV market this year, and do you see it improving maybe in 2026?
I think 2025 has shown to be a lot softer than initially expected, but it's really fragmented with regards to various regions as well. You have obviously the US Gulf that's been fairly quiet, the North Sea that's been quiet, mostly due to some tax issues and policies from the government, which make investments in oil and gas a bit less attractive. But we've seen pockets that have been encouraging. We've seen obviously the Mediterranean with a lot of activities. We've seen the Middle East, but the Middle East is not traditionally a place where you're going to space your large PSVs. And obviously Asia Pacific, mostly with the main market in Asia Pacific is generally Malaysia, and Malaysia have proven to be very soft this year. So I think we're seeing a bit of a softening in market in 2025. 2026, from a drilling point of view, looks to be showing some encouraging rebound. Our fleet right now for the PSVs is more like spread between 50% supporting production and EPCI, and the rest basically supporting drilling. So an uptick of activities in drilling will make our utilization a bit better.
Thank you. Captain Alok. In 2020, Alphard purchased their first few OSV units, which were mainly laid-up assets. Then in 2022, 2023, quality resale units from yard and young tonnages in China were purchased, followed by purchase of entire fleet of OSVs from Indian owners such as Samsung Maritime. Since last year, we noticed Alphard were sellers of few of these rather recently purchased vessels. How have these 5 years been for Alphard? What would be your key takeaways?
5 years in offshore has been wonderful. I made multiples of what I spent, for acquiring these assets, And you have been the broker for some of the assets, so you know. Experience-wise, I tell you, for me, I'm not, interested in one sector of shipping something. Wherever I have to make money, I will go there and come. So I have never been an offshore player as such, and there is no love that I want to build a company offshore of 100 fleets. So basically, I came in as an opportunist investor. I saw assets being sold for 10 cents to a dollar or 25 cents to a dollar, bought it. All the market is good, future is good, but for me, I'm exiting slowly, not like a fleet sale, and made money out of it. Takeaway and the learning lesson, I've been a main fleet shipping guy. Running an offshore fleet is at least 5 to 10 times more demanding than running a main fleet vessels. In main fleet, you can access, whatever calculation you do in Excel sheet, you can achieve at least 90% accuracy. In offshore, it can vary from 30% to 90%. So your Excel doesn't work here. Main fleet, you have payment on time within 3 days of delivery. In offshore, you keep looking when the money will come. So a lot of difficulty, and I have not been in this industry. But yes, offshore also there are a lot of smaller owners. When they get into trouble, they have banking problem, any problem. There is always opportunity if you keep looking for it, and especially for people who can do a quick deal. Like you can't do. You have board approval. I do calls in 2 minutes, take it or leave it. So those are the takeaway. I still, although I'm selling, also I'm buying. You see, I think February till April, I bought 3 PSVs, and also I've been selling. So I will always be interested in offshore only for opportunistic buy. Otherwise, I'm better off in the main fleet.
Okay. I know your thoughts on new builds, but for the benefit of the audience, what are your thoughts on offshore new builds? So basically price versus even the capital getting locked when it comes to installment payments, the DCR and the complexity of the compliances, OPEX. So do the numbers today make sense for you?
Especially for me, it will never make sense. It's good for Tidewater, Britoil, because they are in this business, fleet renewal, long-term planning. For investor, anyway, the people who have made a lot of money in shipping in different sector, they saw opportunity. That's why I said new building coming up, but look at the Tidewater view on that. They don't think that asset, like suppose you build something of $40 million over a 2 year and you sell for $40 million over the point. So I will never go and do a new building. A lot of cash going into the system, keep spending and keep looking, thank God, give me some profit on this. Better you buy 20%, 30% cheaper than the current market, you can flip the asset or put it on long-term charter and make some money out of it. So personally, not even here, even for the main fleet, I have never done a new building and I will not. I can buy from the yard like you sold one to me, it's ready for delivery in 2 months. I know the price, I know the current market, but 2 year, 3 year forward delivery doesn't make sense to me.
So the only message Captain Alok always tells me is, Mili, you need to find me a vessel which makes money tomorrow. If not, don't show me the vessel. So yeah, so I knew that would be his response on new build. Solomon, Energos owns a fleet of FSRUs and gas carriers. At the risk of generalizing new build, higher spec OSVs would typically cost around 80 to 100 million. However, FSRU conversion projects may cost up to $300 million plus. Could you draw similarities between the two industries and your view on new build program?
Thanks, Mili. To the familiar faces and the audience who are familiar with FSRUs, please bear with me. Quick introduction on Energos. We're a fairly new platform, just celebrated our 3rd year of formation. We're 100% backed by Apollo Capital, And as Mili has introduced, we have a fleet of about 13 assets, 9 FSRUs, 2 FSUs, and 2 carriers. We have 3 officers, US, Singapore, and London. You know, for those who are less familiar with FSRUs, so quick introduction, what's an FSRU? I mean, in essence, it is floating storage, you know, for LNG, provides, I mean, you regas and then you supply natural gas to the markets. So in other words, in today's, you know, macroeconomic landscape, is energy access to the countries, to the locations that cannot access it, right? So, you know, the earlier discussion panel, you know, Andrew covered quite a number of points, and I think we share very similar thoughts. In essence, an FSRU is a vessel at the hull and oil and gas on the top side, right? So to a very large extent, we share the same concerns as Andrew. From a new building standpoint, conversion standpoint, I think right now there's a healthy mix of new builds versus conversions. In fact, if you look at the global landscape, there are about 50 FSRUs or thereabouts. The dominant options are, you know, get a donor vessel, you know, bring it to a yard, convert it, put on a regas kit, and then, you know, send it to whichever market. There's also the other train of thought, which is, you know, straight from the yard, just build it to spec, as we have seen in, you know, for the Singapore terminal, for Poland, these are complete new builds. So for us, I think, you know, considerations on new build or conversion, I mean, I guess it depends on the counterparties. You know, the counterparties could be, you know, either gas suppliers or governments, you know, or utility companies at the end. Typically, I would say if we are dealing directly with the off-taker, so likely the government or the utility company, it may be fairly more bespoke, and the consideration to do completely from scratch from a yard will be important. Also, we are dealing with this situation where you know, you require more storage, and the traditional way of converting a aging carrier into an FSRU or floating solution means you'll be dealing with situation where, you know, using a slightly smaller vessel to supply to a larger vessel to supply to a smaller floating storage. So I think these are things to consider. The price gaps are definitely huge, and then, you know, the pros and cons. If you do a conversion, you probably could get it quicker, probably 9 months to a year. Yard from scratch, you probably take a bit longer. Yard availability is a bit of a challenge, but I think the common bottlenecks will also be some of the key lead items. Costs of a conversion versus a new build at times could be 25 to 30% more efficient if you go for a conversion. So you kind of need to balance all of that.
So last week when I was speaking to you and I was getting my 101 on FSRU, so you did mention about the long lead time, about the regas kit, what I call the kit, but it's the entire regasification unit. So if you could explain a bit on that as well, and the lead time with regards to the FSRU, because that's the main component, because it's the vessel plus the regas kit. So if you could explain a bit or on the regasification, the unit part of it, which is the long lead time, one of the most long lead time items.
So, I mean, it's easy, right? There's a healthy supply of donor vessels, and you mentioned the regas kit. I mean, amongst other things, it is one of the most important item for conversion, and the current makers are, I mean, there are not many makers for the regas kit. I mean, everybody will know Wärtsilä, you know, is pretty dominant in that space. And there's also a limitation to how many regas kits that they could produce. Right? Of course, there are alternative makers, and they're also building a reputation of their own. So definitely you'll start to see some of these being featured in some of the other FSRUs or smaller FSRUs in the region. But yeah, I would say that being the critical component, you know, the ability to secure that regas kit to a very large extent, will influence the speed to market, right? So if you can secure that, you can place an order like yesterday, then the ability to have the FSRU ready, you definitely can cut short a lot of the time required.
Thank you. Following questions for both Florent and Thibault. We are now seeing tenders issued by certain oil majors that support new builds. That is, the tenders are for longer duration and they allow decent delivery time. Are your companies participating in these tenders, and are they very heavy on local content requirements? So among others, one of the main oil major, the area that I had in mind when I was preparing this question is Qatar. So if you could share your thoughts on this.
Yes, the offshore market is very fragmented, and you can see national oil companies going for tenders. So of course, local content is very important, and that means the financing for the new build, the flag, the crew, and it's taking really an important, an increasing part. So we're looking into some of these tenders in Qatar, but also in Asia here, and obviously the local content part will be very important. Yeah.
And just to add on what Florent is saying, we've seen that tender from Saudi Aramco that's been launched a bit more than 4 years ago for 14 anchor handlers, and they keep kind of postponing the submission dates. And I think one of the reasons for that is they're not ready for the increase of rate they will see to sustain this kind of new build program. On the other hand, we're seeing oil company like Petrobras obviously launching and awarding, I think it was 12 PSVs for new build, but that was obviously backed with a 12-year contract and rates that we're seeing above $15,000 to $20,000 above the market rate, even in Brazil. So we've also participated in tenders in Norway, which was for Equinor when they wanted to build ammonia vessels. I think the build for those vessels was between $80 to $100 million. And I think eventually Equinor withdrew the tender at the end. And then we're participating in all kinds of tenders in all regions, including recently the one that's been awarded for ExxonMobil in Guyana. So I think they awarded 5 tugs to support their operations and production support. But we're generally working on every single region, and as you just said, the local content is pretty high. Especially Saudi Aramco was kind of imposing, or they were trying to look at options to build in Saudi as well, which is also adding about 30% on top of the building cost. So yeah, I think that's basically what we're looking at.
The difficult thing still is to get favorable contract terms. So you can see compared to 2 years ago, the contracts have improved a lot in our favor, but there are still early termination clauses, which is a big deterrent for us. So we tend to stay quite disciplined, and if there is an easy exit from the charter, then we're not engaging.
I think for the benefit of the audience, so whenever there's an early termination clause, irrespective if your charter says it's a firm 10-year contract, it's a 30-day contract, because if it's early termination for convenience, the oil company will not hesitate to exercise it. Staying with Florent and Thibault, both Britoil and Tidewater have been active in the past couple of years in M&As and consolidation. Any more value deals out there in the next coming months or coming in a year or so?
So when you look at the M&A landscape, it's still, of course, possible, but the main issue is valuation. So you always try to look at value, and it's far less easy than it was 2 years ago, obviously. So there are still opportunities out there, but it really needs a good assessment of the synergies of the combined company. And a lot of time on the seller side, the expectations are quite high. There's been a bit of a dip in regional markets like Southeast Asia and North Sea. So that has triggered some more interesting opportunities. But generally, valuation are still quite high, so not as easy as it was a few years ago.
Yeah, I think same point that Florent just said. Obviously, I've mentioned in the earlier part of the talk that we've managed to do Swire Pacific Offshore, which some people say was the deal of the century because it was pretty cheap. Then we've done the fleet from Solstad. There's always rumors, and we've been quite upfront saying we're still looking at opportunities on the market. But as Florent just said, things are getting more expensive. And then I think from a financial point of view, we're trying to do things more like on equity basis and try to avoid raising too much debt as well. So I think, yeah, the price has to be right, the company has to be right, making sure that there's synergies with regards to the fleet that we want to acquire. And if we are acquiring company as well, making sure that the values of the companies are also kind of in line with what we're trying to do.
Okay, quick. Captain Alok, you have the expertise in both offshore and bulk. As an investor today, which segment are you going to invest in the coming year?
Any sector where I can invest 20-30% below the fair market value. So if you have an offshore player who is in trouble, come to me. I can close the deal in few hours. Dry bulk owners have a lot of money, but still I try to do en bloc deal. Recently I bought 4 ships, which was at least 15% below the market because I went no subs, no inspection, give me 15-20% below the market, I take the risk. So any sector, tomorrow maybe tanker or container, anything which I can buy cheaper, I will go for it.
Thank you. I would need couple of more minutes. 2 minutes, okay. Solomon, new builds for FSRUs. Any high growth markets in Southeast Asia that justify the new build today or additional unit?
Yeah, definitely. I mean, the growth space of tomorrow for FSRUs, a lot of it is happening in Asia. I mean, Singapore just contracted one. Indonesia is in the middle of a process. Vietnam, solutions are being developed. Malaysia is in the market as well. But I think the consideration of whether new build or conversion, I mean, from our perspective, having another FSRU technically is sort of a new build, except that whether it's building from scratch or converting. I think the consideration is, there are numerous considerations which we will go. Mentioned earlier the purpose of the FSRU, whether it is connected to base load power generation or peaking purposes, sort of determines the level of storage, the kind of specs, and whether you need to build it from scratch from the yard. From a financing standpoint, there are multiple variations as well. I mean, if we focus on a conversion perspective, it involves a donor vessel. It could be hypothetically contributed into a JV, and then the capital that's required to finance that whole conversion will predominantly be focused on the conversion itself. But as you can imagine, it's definitely, end of the day, all very project driven, right? So, in this space, you do not have that many speculative tonnage. So everything is going to be by project basis. Of course, if it's new built from scratch, from the hull up, then you probably look at something between 300-400 million easily. And then if it's a conversion, then it could be a little bit, about 25% less.
I know I'm very limited on time, but just for the benefit of the audience, high growth market in Southeast Asia, would I be correct to say Malaysia and Indonesia at this moment for FSRUs from?
Yeah, definitely. The most active at the present moment with ongoing processes will be Malaysia and Indonesia.
Okay. Thank you very much, sirs. Much appreciate your time, and thank you.